How's everybody doing tonight? Getting a little bit of a light start, but we are going live now. I hope everyone's been enjoying themselves today. And I hope everyone had a good weekend. Everyone's been enjoying. As usual, I'm giving a few minutes here to get some people up on the live stream. So I'm sharing it out on my personal page now, still being blocked by Facebook from posting in groups. So if you are, watching right now, if this video isn't posted in a group that you conversate with others about, black economics, investing, cryptocurrencies, if you think this show is some value to you or to others, make sure you share it in your Facebook group, share it on your page, and don't forget, when you do share, go ahead and make a like or a comment like and comment on the video as well, so you will be entered into our weekly Bitcoin giveaway. So if you want an opportunity to add a couple of Bitcoins to your wallet, share, like, and comment on today's video or one of this week's episodes, and you'll be automatically entered to win some free Bitcoin. I've been doing it now for about 3 or 4 weeks, and hey, I appreciate the love and support y'all showing me, so I gotta give something back. I'm just give just a few more moments here. And hey, all right, everybody. We are live in effect once again. I want to welcome everyone to tonight's episode of the Black Money Market News. Once again, I am your host, Samuel Hill, here just to bring you guys some of the latest information when it comes to stocks, investing, cryptocurrencies. Again, if you know me, you know my mission is to help, push the black agenda forward from an economics perspective. I feel that until we get our economics act together, the same struggles, the same problems we're facing will continue. It doesn't matter if you're talking about our politics, it doesn't matter if you're talking about the education our kids are receiving, the food deserts down in our community. 90% of those type of problems can be solved with a little bit of dollar bills, y'all. So if you're tuning in, this show is to help make sure you're educated on some ways to grow your dollars and put your money to work for you. All right, so first thing I want to do to start off with the show is go ahead and go over some of the stock market performance for the day. The Dow Jones Industrial Average ended up a little over half a percentage point, closing out at all-time highs of 24,792. S&P 500 also had a nice gain of $14.35, roughly a little over half a percent as well, touching the all-time, touching some all-time highs as well. Nasdaq crossed the 7,000 price point for the first time ever today, ended just below that level to close the day at 6,994. Russell 2000 also hit all-time highs again today. It was the big gainer for the big markets, up a little over 1.2%, ending the day 1548 and 92 cents. Bitcoin was down roughly a point and a half, percentage point and a half early today. When I ran these numbers, it was down to $19,055.01. Gold was also down on the markets today, down a little over $1. And the Euro USD US dollar was roughly flat today. So pretty interesting day on the markets. If you were watching the markets today, you saw the markets open up to all-time highs off of the pretty much the finalization of the tax plan over the weekend. The senators and the House Republicans have pretty much hashed out their final agreement. The SALT reduction I was telling you guys about last week, there has been provisions made to make sure that those higher tax, residents of those higher tax states won't see as much of an increase as feared. So there's some positive news there. Also some positive news from a business perspective on these lower tax rates, and I'll kind of dive into those later just to show you what these tax rate cuts means from an investor standpoint. That's going to be my special later on in tonight's episode. Overall, you also had some big mergers announced today. Campbell's Soup announced that they were going to be buying, I want to say it was Snyder's snack company. Let me pull up my notes again real quick, folks. I should have had them open, but got started just a little late tonight. But I want to make sure I give you guys the accurate information. I know I have it here on the stock sticker. Yeah, Campbell's is buying Snyder's Lance snack company. They're more famous for their Snyder's pretzels. Sorry about that. They also own Cape Cod's Kettles popcorn chip and Pop Secret popcorn. The deal is valued at $4.9 billion. You know what I'm saying? A $50 a share all cash deal. So this still has to go through some regulatory approvals, but this should be some a good move for Campbell's. Campbell's stock has been struggling as of late, down roughly 17% this year. They already own, Pepperidge Farms, which makes, Goldfish and Milano cookies. So it will definitely help bolster up some of their, snack holdings that they, currently have, and increase their snack portfolio, and also will give them access, bigger, I wouldn't say access, bigger share in more of the healthier snack options with the smart popcorn as well. So good move, I believe, on Campbell. But definitely will be a wait to see if the shareholders go ahead and approve the deal and exactly how they plan to integrate. Another big merger that was announced today was Hershey's announcement that they were going to acquire the maker of Skinny Pop popcorn. The company's called Amplify. For $1.6 billion, a $12 a share price, a 71% premium over Friday's closing price. Again, this is another big move by a staple large snack and candy maker to get more diversified and more access to smart, healthier snacks. Both of these moves are a good move and look towards the convenience store versus grocery stores, which have been facing pricing pressures, both of Amplify's brand and with Snyder Lance's brand have good shelving spaces in the convenience store sector of the market, which does have a little bit better price and premium. So both of these could be seen as ways to help diversify their current portfolio of brands and their offerings to the market. So definitely would say would be another good move for Hershey with this acquisition. Again, still waiting for regulatory and shareholder approval, but with that pricing premium, I definitely don't see why the shareholders of Amplify wouldn't want to take that money and run. So the last big kind of story that kind of hit late in the day is the acquisition of Chicago Bridge and Iron by a let me find this article again. Sorry, folks. By McDermott. It was a $6 billion all stock deal that they've announced. Comparing to where CBI was trading just over a year ago, it was in the $35 range. So, pretty much being offered all stock for McDermott, which would value at 2.4 shares of McDermott for every share held of CBI. Only giving it a 3% premium over the current stock price. Doesn't seem like a good deal for shareholders, but this would kind of consolidate some oil opportunities, as well as kind of bring Chicago Bridge and Iron back into U.S. ownership, as it recently was acquired just a few years ago by a Netherlands-based operation. So we'll see how this deal turns out. Waiting for shareholder and regulatory approval again on that, since these deals were just announced in the last 24 to 48 hours. So definitely stay tuned for what could be coming on in those worlds. In news today, what I wanted to mainly touch on was some of the companies that can really benefit from these changes that's going on when it comes to taxes. So I'm going ahead and bring up some information for you guys that may not know. The current U.S. tax rate for most corporations are right around 38 to 39%, with some companies paying, more or less around those rates, and a lot of companies honestly paying a lot lower rates. But some of these big name brands that are, U.S. centric on their income will be looking at large tax savings. With the new 21% corporate rate being negotiated with the new tax reform that was approved, that's going through the process now. But so, some examples will be the highest tax rate right now is listed by United Health Group. Symbol UNH is at 40%. Verizon Communications is also at 34%, McDonald's 33%, Walmart 31%, Home Depot 36%, Walt Disney 33%, American Express 39%, and Visa 29%. So, with the lowest tax rates, companies like United Health would be looking at substantial savings. I ran some numbers earlier, so let me pull those up just to give you guys a understanding of what a 21% tax cut would mean from an investor standpoint. So for an investor in United Healthcare, looking at the last fiscal year fully published on earnings, which was 2016, the company paid $4.79 billion on $11.86 billion in profit. With the new 2018 tax rates, that would add $2.49 billion, which would add back $2.49 billion in their profit to the shareholders, which would add $2.39 per share, which if you keep the current price to earnings ratio, your price to earnings ratio, it would boost the price for United Healthcare up to $238 per share. So when you looked at the fact that United Healthcare pull it up again. United Healthcare today closed out at $22.67. You're looking at a good, $10 to $15 added to the current stock price, which would work out to roughly a 5 to 6% move over current pricing. So could be a great opportunity for a short-term play, especially once analysts start adjusting their earnings reports for next year. Another example will be Home Depot. Home Depot paid $4.53 billion in taxes for fiscal year 2017 off of $12.49 billion in profit. The new 21% tax rate would add back $1.9 billion to shareholders, which works out to $1.57 per share, boosting their stock price with the current price to earnings evaluation to $205.79 versus the current pricing that closed today at $184.73. So on that one, you're looking at a good $20 move, or roughly a nearly 10% move on the price. A little over 10% move on the price, in fact. So that one could be a good opportunity being set up there for Home Depot. Another example will be Verizon. Verizon's fiscal year 2016 paid $7.38 billion off of $20.99 billion in profit. The 2018 tax rate would drop down to $4.4 billion, adding roughly 16 cents a share, or raising the price with the current price to earnings ratio to $55.42. Not as much of a move, when you're looking at the tax rate for Verizon, even though they're, as a company will be saving more than the other two, technically nearly combined actually, but because Verizon has nearly 4 billion outstanding shares versus less than a billion on Home Depot and United Healthcare, those two, that factor really kind of waters down that earnings upside potential off of the tax plan compared to Verizon. So if you're doing your research, what you want to look at, in fact, let me see if I can just go ahead and pull up and show you guys how I was calculating these numbers, so you'll know how to kind of run and gun these yourself. I'm just going to see if I can do some screen shares, buy out, and I want to do a new company that I haven't talked about yet, but we're going to break down Disney. All right. So looking at Disney, here on MarketWatch.com, great website for you home viewers out there. MarketWatch.com gives you a lot of quick access to information when it comes to your stock. So we just want to go right now to this financials tab. Once we pull up financials, we want to look at the current year that is available. So they do have 2017 earnings posted. So if you're looking at the pre-tax income, which is 13.79 billion for Disney. So pull up my calculator. So we put 13.79. We're going to times that by 0.79, which would give you $10.89 billion, which would be the new earnings paid out to shareholders, which, as you can see, versus the 8.98 for 2017, you're looking at roughly almost $2 billion added back to Disney shareholders. If you look at that divided by the number of outstanding shares, which is 1.58 billion. So I'm going to divide that by 1.58 billion. You're looking at roughly $6.90 per share, which is a good $1.30 difference, $1.20 difference compared to last year. So that's a nice boost to earnings. So if we're looking at a $6.895 per share with the current, let's go back to this overview page and we can take a look at its current price to earnings ratio, which is 19.51. We're looking at $134.52 a share of stock. So, Disney may be a great opportunity just based off of, where it's currently priced to where it could be priced once we look at these new earnings from the savings from a tax perspective. I want to give you guys a quick rundown on how you can evaluate these companies yourself so you know how to pick the best options in the stock market. And with these tax cuts coming, I think this will be a great opportunity for companies to put that money back to shareholders. If you look at the past, these tax cuts have been sold as a way to increase jobs and as a way for, businesses to be able to increase wages and increase research, development, and investments into their business. But if you look at, the previous tax cuts, like in 2004 under George Bush, most of that money rolled back to the hands of the shareholders. So again, not looking at this from a morally or conscious perspective, but looking at this from an investor's perspective. This could be a great buying opportunity in some of these companies that have high tax rates. So I'll probably be touching on this again after the bill and ink and everything is dried and everything's been signed, especially as these analysts start increasing their earnings estimates. You will start seeing, I believe, even a bigger rally in some of these companies than what we're currently looking at. So definitely stay tuned for that. I will be having another special guest this week, and I need to lock in and make sure he's still going to be available this week. I've been kind of slipping on my end, but I appreciate everyone that's tuned in tonight. Let me see if there's been any questions posted. I kind of looked a few minutes ago. I didn't really see anything, so let me give one final check to see if there's anybody with some questions out there. Anybody? All right, there's no questions in the comments right now. So again, I appreciate everyone that's watched tonight. If you're watching later on or one of the replays, make sure again, if you want a chance to enter this week's Bitcoin giveaway, make sure you like the page, Black Money Market News. Make sure you like the video that you're watching, share it out, and make a comment. That's all you have to do to be entered to win free Bitcoin for the week. Again, you guys have been great on participating and communicating with me the needs you guys need. So hopefully, I am bringing the information to you guys in a way that is helpful, informational, as well as somewhat entertaining. I will be again finalizing a special guest for this week, and we'll let you guys know on Wednesday's show who that will be. So stay tuned in for our next episode on Wednesday night. Other than that, I appreciate everyone tuning in this evening. Again, my name is Sam, and this has been the Black Money Market News for December 18th. So enjoy you guys, enjoy yourselves. Good night.